Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today I'd like to go over weekly strategy, to have a weekly strategy roundtable and go over current market conditions, what to expect short-term, long-term, some of the themes in the market, right? Healthcare, Eli Lilly, electrical vehicle, Rivian, NIO. And answer any questions you might have. So welcome. This is my brief bio. For those, if you're new, please type in first. Always want to welcome new subscribers, say hi. So please type in first. If you're a new subscriber, welcome back everyone else. I appreciate your time, commitment. This is my brief bio. My background is technology and writing code, right? I was a CTO of several companies that some of them actually went public. So pretty proud of that experience. Groupon, Options Express, Media Bank. Started Tradespoon over 10 years ago. I've been managing my own money. I do have a master's degree in computer science, specializing in artificial intelligence. I was writing neural networks, 20 years ago. So artificial intelligence is not something new, but obviously in the past few years, it has been the improvements have been accelerating. I've been managing my own money for over 15 years, mentoring and teaching subscribers for trading stock and options, and finally I have a master's degree in computer science. Disclosures are very important. If you're new to trading stock and options, please visit the link on your screen to understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. Please consult your advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance. All right, in terms of trading plan, before we jump into a trading plan, let's talk about current market conditions and see what has happened recently. So today we did have, yesterday we had CPI data and PPI data. Some people argue that today's PPI data was slightly higher, right? 0.2 versus 0.3 versus 0.2. And that there could be a resurgence in some of the commodity prices. So whether it was a CPI data yesterday or PPI data today, I'm not sure if this matters significantly. It does look like market is getting weaker, right? So QQQ technology stocks are now as a group, right? We had NVIDIA, right? This was the main reason for rally, right? Rally in the May, right? Right after NVIDIA announced earnings, this is when the entire market accelerated the move up on the idea of that artificial intelligence can provide meaningful impact on the bottom and top line short term. So NVIDIA is trading below 50-day moving average. You have Apple broke down after their earnings and trading below 50-day moving average, making new lows and similar to Microsoft. So then the question, and now QQQ is the group is trading below 50-day moving average, which is considered to be bearish, right? It could be a false breakdown, right? We could finish above the red line by end of the day, or the breakdown is confirmed, right? Like in semiconductors, right? It's been 3 days we were trading below 50-day moving average and trading at this, I would say, key support. I would say here. Lower Bollinger, so two standard deviation, right, based on historical volatility, only happens, 5% of the time, right? 5% of the time you have such a big pullback, and and so market short term is extremely oversold, but that's the next level of support. So now the question is, the theme is, okay, it is true that technology is overbought, right? We have elevator up, earnings some beat, right? You have Google, and you have Meta, and you have some of the technology names that beat earnings estimates, right? Amazon, right, and continue to trade higher. You have some that continue to trade lower, But is there a rotation into the value stocks? Value stocks in general, right, are still sitting, broke through the year-to-date high, right, and trading at almost all-time high, right, retesting all-time high. So is there enough momentum in value stocks to have rotation in energy, right? We've seen big surge in energy, right, vertical move in XLE and XOP. We have vertical move in industrials and home builders, right? So is there rotation from technology to cyclical? Because if there is a rotation from technology to cyclicals, then, you know, this is just a healthy pullback, right? Spiders, healthy pullback, I mean, 5%, I think, what are we at this point? 4%, 3%. So 4% healthy pullback. I mean, maybe we can get to 6%, maybe even, you know, 10% pullback. But, you know, usually all of this is considered to be a healthy pullback in a bull market if we have rotation from technology into cyclical names. Right. On the other hand, you know, dollar continues to, I mean, it paused, but it's still trying to break through this overhead resistance. Let's zoom into weekly chart. Right, so dollar continues, I mean, it hasn't made new highs this week, so that's the win for the bulls. And 10-year yield also did not make new highs, but sitting at this overhead resistance on worse than expected inflation data. So there are two choices, right? Dollar continues going higher and 10-year go higher because the expectation that inflation is going to stay here higher for longer and interest rates will stay higher for longer, or we have a reversal pullback and the market continues to go higher. So let's go through these two scenarios. I encourage you to do this in the live trading room. It's very important to go through the scenario just to see if there's, you know, there are two things in the next couple of weeks. We go back to 460 and higher, right? Or, you know, we drop to 430, right? The next level of support briefly pierced through the support today. So the next level, the long-term support, right, going back to August of last year. So 12 months support, the breakout that happened in May is at 430, right? That's kind of the magic line, right? So then we pull back to 430, right? Those are the two scenarios, right? Next level is 430, 15 points to the downside, 15 points to the upside. So scenario one or scenario two for the next couple of weeks. And in live trading room, I'd start live trading room always with that scenario, right? And I think it's extremely important to go through these positive and negative visualizations, right? I do a lot of earnings strategies, and I always at the live trading room tell, you know, imagine that, you know, earnings are, you know, someone hit a home run, or someone got striked out, and the stock moves 10%, 20%. How do you feel? What is your position size looks like? What is your gain or loss looks like? And why do these exercises are important? To help you determine position size, right? Because if the position size is inappropriate, right, when you deal with risk management, then when a trade goes against you, you get emotional, right? So avoiding getting very emotional, the only way to do this is position size, right? Because you know sometimes market will go in your direction and sometimes it will not. So when the market is not going in your direction, you have to make sure that you're sizing position appropriately based on your own emotions, your own risk tolerance level, right? We all have different risk tolerance level. So I encourage you to do that. So let's go through this exercise. One, if you think we're going to continue going higher and retest all-time highs, or two, we're going to retest August, the breakout August, you know, August high of last year. So 430 or 460, what's the next move in the market? So one, if you think we're going higher, and two, if you think we're going lower. Joseph, two, thank you. Andre, Bernie, Calvin, Don, Harminder, Joseph, Kathy, Martin, Paula, Renata, T, Tim, Michael, Steve, Tom, Rob. Wow, everybody said 2, except one person, Andre. Okay. So most of you said 2, right? Most of you said we're going to 430, maybe because you're part of the live training room, or maybe, obviously we haven't had 2 red, assuming we're going to close at the same level on spiders, this is a two weeks in a row of red candlestick, which we haven't had since March, right? When we had liquidity issues in Silicon Valley Bank and other regional banks, right? So we had 2 red candlesticks. Here, this is the first time since March. So it's been 5 months where we haven't seen 2 red candlesticks. And next week is going to be important, right? If we see another red candlestick, usually 3 red candlesticks in a row is considered to be one of the most bearish price patterns you can find, right? So if we break through 444, which we did today, 443 was the low. I mean, one day doesn't set the trend, but if day 2 we're below 444, day 3 we're trading below 444, and we have a red candlestick, I think then the market sell-off will accelerate and we revisit 430, right? A lot of it has to do on dollar and yield. I'm not sure what we had CPI and PPI data, right? That can move the market next week. We have retail sales, right? They've been weak so far, year over year. China information comes in worse than expected. Another theme is the headline news: China import prices, export prices are dropping. Looks like they're in disinflationary environment. The restart of the economy doesn't go as well as everybody planned. And actually, one of the headline news that I haven't seen on Wall Street Journal is that there's another big lender in China that is unable to make a payment, right? And they have 30 days to make payments. We have this deja vu from a couple years ago when what is it, Evergrande or forgot the name of the company. But the idea that you have real estate distress, right? Liquidity issues in areas like San Francisco, right, and Arizona, and you also now have resurgence of these headline news from China, right? And China quietly is very weak, right? We have 2 big red candlesticks, right? We give up all of the gains from the stimulus stock, right? On one hand, you have additional stimulus stock from China. On the other hand, you have poor economic data and concern about commercial and residential real estate. So that's bearish price pattern. So next week, I'm not sure if there's any news. All the earnings are already kind of winding down. We do have retail sales, right, from Walmart and Target coming out. It's been weaker than expected, right? So you can see targets of the world. Target. Pretty weak, right? And XRT, I think in general, is pretty weak. Right, still pretty weak and kind of rolling over. So personally, I also I'm going to say 2, right? I think it's just a matter of time. QQQ, elevator up since January, right, or since March. Right, since March, it was just like one-way trade. We have 2 weeks in a row. This uptrend, this 45-degree angle or 60-degree angle uptrend is broken. And you have mega cap technology trading below. And if this level doesn't hold, right, which is this March highs, if this level doesn't hold, the next level would be August high, right, August high of previous year, which is meaningful pullback, 10, 15% pullback in technology. So I would personally hedge your portfolio. If all of your positions are bullish, maybe consider having half of your position bearish, maybe buy puts, right? A lot of people ask me, Vlad, how do you hedge? Well, you can buy puts, right? That's insurance. Most of the people don't know how to trade options, are not comfortable. So then you buy stocks or ETF like SH, right? You can buy inverse ETF. SH, in theory, will continue going higher one-to-one with spiders, just in a different direction, right? So you have 2 weeks in a row of higher highs in SH. You have 2 weeks in a row of higher highs in PSQ, right? And these are not leveraged ETFs, and they move one-to-one with the underlying stock market. So that could be a good hedge. I think TLT is still a good hedge. If the technology continues to sell off, I think TLT will rebound, right? And those could be your positions to hedge. On the other hand, just, you do have to realize that market is extremely oversold, right? And usually 50-day moving average does hold, right? 7 out of 10 times, 50-day moving average holds, right? I mean, you do have kind of 3 days we've been fighting for this 50-day moving average, which we haven't had for quite some time, right? Probably since March. But, both might step in. They might step in. So on one hand, market is oversold and can bounce back. I would say back to this trend line. We've attempted to break this trend line yesterday and the day before yesterday, and looks like towards the end of the session, market sell off, right? It looks like retail flow comes in the morning and people are bidding up the prices, but then towards the end of the session, when institutions rebalance in mutual funds, and ETFs rebalancing, you do have, towards the end of the last 15 minutes of the session, you do have kind of reversals. So we'll see if today is going to be different, but that's the view on the market. All right, how do you, and in terms of sentiment, we've looked at the sentiment chart. It's extremely high, right? Mark made a really good call about December, because I was bearish in December. I thought we will have, pretty weak first 6 months. I was wrong, mainly because of, China reopening and generative AI, right? But now the situation is in reverse, right? And I think Mark is also going to say, well, we are the same sentiment we're at the end of the year, end of the last bull market of 2020 and 2019, right? Post-COVID bull market, we were at these levels. So do we go back to 20? Not the greatest timing indicator considered to be, but Mark made a really timely call back in December, right? Because December was the worst month on the history, or in the past 50 years, worst December, right? It was followed by a strong rally in the next 6 months. Now we have the strongest 6 months, right, in history of stock market, right? The first 6 months, even better than it was. Technology rally even more than they did during the internet bubble. So market is overbought, sentiment is overbought. Does it mean it goes down? Eventually, timing indicator, you just have to wait and see. But there are signs that market is in distress. All right, any questions on the market? So what do we do with yellow at the Tradespoon? We do have different services that help you navigate the current market conditions. So if you want to follow my trades, you have trader log, right? And you can see all of the trades I do, right? Some of them this is an example where I'm hedging, right? I'm adding to my SH position because spiders breaking down, technology is breaking down below 50-day moving average. I personally think that the sell-off will accelerate, especially because of the seasonality, right? A lot of people are on vacation, earnings is over. I'm not sure what the next bullish catalyst is, right? It could be, Powell comes out and say, listen, we see a lot of distress in the system. We're going to start lowering interest rates. That obviously will give a bullish catalyst to the market. Or Russia and Ukraine will sign a peace agreement, right? Things like that will be a bullish catalyst. But you can't predict when they're going to happen. So for that reason, I'm adding to the hedge, SH, right? And this is, you don't need to know how to trade options. This is inverse ETF of spiders 1-to-1. If spider is going down 1%, SH will go up 1%. I also trade options. So this is an example of an option spread. It expires next week, not really enough time, so I close the the 195, 190 call spread for $2, right? So you have example of both option trades and stock trades. Some of them are geared toward earnings. So this week, let's zoom out. I trade Lyft. Lyft had earnings, I'm selling out of the money premium. Or some of them has to do with a theme like energy. So I bought XLE 81.86 call spread, trying to exit it out at $4.40. I'm getting close. And Schlumberger, right? I bought Schlumberger and exited out. So try to do both example of stock and option trades with recognizing that not everyone is comfortable trading options, and then you have your choices. So that's, and you can enter your phone into the SMS alerts and you get real-time notification. These are real orders from exchange. This is not a Twitter feed where I'm just putting hypothetical orders, right? This is synchronized with my broker-dealer account, and these are real, all of the real trades. You can find them all under performance. So you get SMS messages. You can always log in real time and look at my orders and positions. And the most important feature to me is live trading room, right? If you need guidance to navigate through the volatility, or you want to know, every day I explain why I get in or get out of the position. I explain how to determine position size, which is the most important. The most important is not to decide to buy or sell Schlumberger. The most important is to decide how many shares do you want to buy. And we're all different, right? You know, I can buy 100 shares, and Michael can buy 50 shares, and Joe can buy, 2,000 shares, right? That is individual choice, and there's no magic formula that's universally accepted, right? So that's risk management is the most important skill any trader can have, especially in the downward, when the market trades sideways or to the downside. So that's Elite Circle. If you can participate in live trading room, we have morning bell and closing bell. I encourage you to review the recordings, right? I understand a lot of people have other commitments. So you do have recordings, and this is something I encourage you to participate. Any questions so far? All right. What else? Stock Forecast Toolbox has been a great tool, right? I use it on all my live trading room, especially for liquid names like ETFs, spiders, QQQ, IWM, Apple, Microsoft, NVIDIA. When something is liquid and cannot be driven by random news, right? Small biotech stocks, FDA got approved, okay, stock moves, model cannot predict it. If you have earnings on the stock and you have, 2 standard deviations and above move, model cannot predict it. But if you don't have 2 standard deviation moves, right, then the model is pretty accurate, saying, listen, today we still have a negative trend, right? Bears are in control short term. For the next 10 days, bears are in control. At 443.80, right, this is the model predicted, maybe you should go long, right? And you can see today we hit 443. We are, last time I checked, we're at 445, 446. So this is your buy. If the market continues to rally and we close the gap and we get to yesterday's high, 450, 451, 452, that's considered going short, right? So this is AI model based on a neural network. It trains on the data. It's not training on any news because, I consider them random, right? I mean, there's sentiments, you can search Twitter and stock tweets and figure out sentiment. That's what a lot of hedge funds do. That's not what this model does. This model learns basically on the price data, completely unbiased, doesn't care about bulls or bears, but it tells you right now, model sees downward pressure, 443 you buy, 451 you go short, right? It's doing a good job, model grade B. Every week we actually examine our predictions, how accurate they are, and the model gives the grade to itself, basically. All right, it also grades itself. So, and it's a pretty big difference. You can see volatility is picking up, and 443 versus 451, 8 points. That's almost 2%, right? Almost 2% difference. So whether you're doing day trading or you enter in your long or short positions, if you're bullish on the market, right? Someone said I'm bullish on the market, great. There's nothing wrong with that, right? Most people are actually, based on this investor sentiment chart, most people are bullish. You know, the model encourages you to be patient, not to buy at 451 because, you know, it's kind of you overpaying, but wait for 43, right? So even if you can save 0.5% or even 1% or 0.5% on entry of your long position and 0.5% to 1% on exit, and you can analyze any stocks, that will make a huge difference in your bottom line. In over a year, you will see how your performance has significantly improved just by using this model, just looking at the support and resistance. Because 81% of the time, the model is accurate. And 20% when it's not, you have some random event that pushes the market beyond 2 standard deviation move. Right, trading statistics. Most of the time, we sit within 1 standard deviation. Right, most of the time, 70% of the time, we're within 1 standard deviation. 5% of the time, we move beyond 2 standard deviation, whether it's CEO is squealing or earnings are really bad or, you know, CPI is really good, something along those lines. But 9 out of 10 times we're trading within the range and the model predicts that accurately. So I encourage you to review that model and use it. Any questions on Stock Forecast Toolbox? And we do have tools membership. You can just buy tools if you don't, you know, we do have a lot of experienced traders that don't really need to follow my trades, or they don't need me to tell them when to buy or sell Schlumberger. They just want signals, right? If you just want signal, you're on your own, you're doing your analysis. Obviously, Stock Forecast Toolbox is a great tool. And we do have these different models, 3 different models that pick stocks for different time interval, right? So for today, we picked NASDAQ, right? It basically says, you know, not a lot of bullish signals today, but NASDAQ model does see in a strong uptrend, right? Model does see strong uptrend in, you know, in exchanges, right? People are trading, so so you do have this thrust to the upside. We did make new highs, so basically model says if you see that NASDAQ reaches 5150, which is exactly where we are, or if you see a pullback pre-market, if you see, you know, pre-market futures were down right after the PPI data, then maybe it makes sense to wait for 49.97, right? But you're on your own, you make a decision, and model encourages you to look for 1% gain or 1% stop loss. But, you know, people ask, Vlad, what if it moves less than 1%? The idea of these models and picks is that you have your own trading plan. You know when to enter, you know when to exit, right? These are just guidelines. There's no kind of magic rule. If you're asking these questions, you're not sure when to enter or exit, then this is probably not the right, you still need some kind of guidelines. Then I would go into Elite Circle or anywhere where I trade, right? Shadow Trader, because you can ask questions, you can see my recordings, and I can explain you how I make a decision when to enter or exit, and then you can make your own decision, right? But if you have your own trading plan, you know, then I would use Stock Forecast Toolbox, Active Trader, Weekly Trader, Monthly Trader. It just depends how long you hold in position, right? Active Trader is short-term trading for 1 couple days, weekly trade couple of weeks, monthly trade a couple months, right? Holding time. And obviously, the longer you hold, the longer you can. I personally like to use this and sometimes hold the position beyond 1 day, right? Like Schlumberger was Active Trader, but I held it for a few more days because I don't have any exposure to energy, and I decided, okay, short term it's an uptrend. I think I'm going to hold it a little longer, right? Made my own decision, but that's how I would use this model. And it also provides you option ideas, right? So same stock, but basically it uses as a stocks substitution, right? Instead of buying NASDAQ at $50, it says buy 45 call and at 495. Any questions on Active Trader, Weekly Trader, Monthly Trader, or Stock Forecast Toolbox? Okay. We do have a YouTube channel, so we have live broadcasts every Wednesday, morning session, closing bell session. If you haven't signed up for our YouTube channel, please do so. I encourage you to do so. Click on subscribe, participate every morning, Wednesday morning and Wednesday closing bell. What else? If you're looking for just option trading, we do have a premium portfolio. This is one trade idea every week, like IWM, or I did Apple bullish call spread a few weeks ago, IWM, XLF. So these are one option spread trade idea. You can get orders, positions, SMS messages every time I trade. If you're not comfortable trading options, we do have robo-investor. So you only get stock trades, right? If you want everything, options, stock, spreads, then it's Elite Circle, right? So those are different features we have on the website. We do have Learning Center, a lot of, if you're looking for different topics, on technical analysis, advanced technical analysis, options basics, trade management, portfolio management, you can find these lessons, they're free. We do have different recordings, workshop recordings of also on these analysis. We have guides, short-term trading plan, long-term trading plan to help you. Again, I would use these manuals and I would use them along with participating in live trading room. And then we do have trading guide, just how to trade in general. All right, any questions on the features? All right, so I'm gonna make 1 second. So if you are looking for membership, right, we have different membership that I went over. We have different pricing structure. Some people prefer monthly payments, some people prefer lifetime, payments. Great. Please give us a call. I'm going to put that down number. We have Jordan, who is our product specialist. He knows all of the prices. He knows all of the memberships. Give Jordan a call if you're looking, especially if you're looking for savings. The difference between monthly payment plan and annual or lifetime plans could be thousands of dollars that you could be saving. So give him a call, even if you're not looking for paid subscription. Call him, say hello. He's a nice guy, and at least you can learn about different levels of subscriptions. So 312-625-0287, Jordan, he's waiting for your call. All right. Any questions? Any questions? So in terms of themes, what people are looking for. So I do have a position in Clorox, right? So consumer staples, I think, could outperform the market, right? You can see actually CLX is outperforming technology today. This is popular. Consumer staples in general is a good place to usually hide when volatility is picking up. Doesn't mean it doesn't sell off, but it's just not going to sell off as much as semiconductors. So I would definitely probably stay away from technology, especially I'm looking at all the earnings. If the earnings are great, you have small move to the upside. If the earnings are just in line with expectations, you have a big pullbacks, right? Like Palantir, one of the AI stocks, had great earnings. There was nothing. They met their revenue guidelines. They met their bottom line, top line, guided the same way, and the stock is down from 20 to 15, right? Elevator up, elevator down. So technology stocks, probably the rally is on pause, at least until October, November. So I would maybe rotate out of the technology names, and one place is consumer staples, another one is energy. Looks like crude oil is trying to break out from overhead resistance. A lot of people are calling for $90, $100 stocks. A lot of people are concerned that that's boosting the PPI data and inflation. Maybe not. So far, it's trading higher. This trend, this elevator uptrend, is intact. It is overbought, right? We've seen with technology, elevator up, usually elevator down. On which floor the elevator is down, that's hard to determine. Could be floor 6, could be floor 8, could be floor 10. It just depends on how much momentum behind these moves, right? And how much news flow. So, but I do have energy exposure, consumer staples exposure, healthcare. All right, healthcare is a strong theme. It's at year-to-date high, trying to break out. And you have themes like LA Lilly, right? Weight loss, right? So not all stocks follow the indexes, right? There are stories, there are themes that you can't just, ignore. And this is an example of LA Lilly and the healthcare sector, just in general. So those are the themes that I would consider going long. LA Lilly, I would just buy on any pullbacks. If you believe in a stock, just size is important, right? Position size is important. That's why on all of these tools, I encourage you to read the notes, right? Important notes, these are very common questions. So the most important rule is if you're not sure when to enter or exit LA Lilly position or Schlumberger, right? If you're asking whether I should buy it or sell it, I encourage you, that means that you probably haven't traded long enough and you don't have a solid trading plan, right? So then the answer is you can buy anything you want, right? But I propose now no more than 4 positions and maximum loss of 2.5% of account value, right? In live trading room, we go through these exercises like we did this morning, target gains, stop losses, how do you feel, right? Self-awareness is extremely important. Maintaining journal is extremely important. Having written down trading plan is extremely important. We go over that, all of these in the live trading room, right? But it's very important to have these rules and follow them religiously, right? Kind of you write this down, just like in a business, treat it as a business. You have articles of incorporations, you have, what is it called? Operating agreement, right? You don't break operating agreement, right? You can amend your operating agreement, when you meet with your directors and, your business partners, but you can't just every day change the operating agreement. Trading is the same way. You have certain rules, you write them down, and it's an operating agreement. It's between you and yourself, right, usually. But you have to be honest with yourself, right? And you have to, self-awareness, emotional intelligence is extremely important, right, when it comes to trading, right? Because that can help you decide how would you feel if the market is up 10%? How would you feel if the market is down 10%, right? You can kind of look into the future, yourself well, and that can help you guide how, what the position size should be, right? Because you can buy LA Lilly, right? Vlad say buy LA Lilly, everybody says LA Lilly, it drops to 460, maybe because whatever, the insurance doesn't approve the drug, right? Or, or something like that. It drops to 460 and, 10-15%, and you're down, let's say, more than 2.5%, and you exit out only to see that the stock gets back to 528 and rally. So position size is extremely important. Electrical vehicles, question on electrical vehicles. Martin, thank you for participating. So far, I think it's been muted reaction. I think just like technology, they're on hold, right? You see elevator up in Rivian, elevator down in Rivian, you see Tesla. I mean, I haven't seen any stocks that I want to buy, right? Even Bob, I don't know where Bob went. I think, his Nikola trade maybe didn't work out as much as he wanted to, but Bob, where are you? But anyway, right? So you have elevator up, you have elevator down, right? So I haven't seen any liquid, any liquid names in electrical vehicle which I want to own, right? So for now, high beta stocks, is on pause, right? And it's been reflected in a high yield, right? I would look at high yield, right, as the guidelines. Kind of determining, how much risk tolerance out there. And we are trading below 50-day moving average, below 200-day moving average. You have a crossover, right? This 50-day move crosses over with 200, that could be bearish, right? That means very low risk tolerance for risk, right? So risk means AI stocks, means electrical vehicles, right? When Fed will start lowering interest rate and you see high yields start going up, right? Because yellow is not going through bankruptcy, WeWork is not going through bankruptcy. That's your signal, for high beta stocks. Any questions so far? Any stocks? Any? Andre, Calvin, Don, Harminder, Joseph, Kevin, Coffee, Renata, Rick, Tim, Mark. Any questions I can answer? All right, if there are no questions, please give Jordan a call. If you're looking to save thousands of dollars between different types of membership, different duration, this is your opportunity. I would appreciate a call. If one thing you want to learn out of this presentation, it's 4 positions and never lose more than 2.5% of your account value per position, and keep a journal, right? Sometimes you will be able to do this. Sometimes you will not be able to do this, right? Because of the fear of missing out or fear of future regret. But it's important to write it down and review that journal, right? And just, and the goal is 9 out of 10 trades, grade yourself. You should get A and B because you didn't break any rules. And 1 out of 10, you will break your rules. I break my own rules. I say one thing and do different things. That happens. But it's very important to keep it in writing, review it, and being honest with yourself, and strive to do better. All right, thank you very much, and have a great day.